Today on the show, we're going to look into the crystal ball and try to look into the future. We're going to talk about the housing market with J.P. Pirtle. But right now, we're going to talk about taxes and what the future holds for us with the man who certainly knows his business. That is Marcus Warren of Warren Wealth Management. What's important is you're also a tax expert, and that's today's topic. So it may seem obvious to some, but you have better insight than most, and that is taxes are going up. Is that right?
Yeah, well, I mean, they basically, have to. When you think about our debts and our deficits and things of that nature, you really think that they have to, and it really can affect one's retirement. And so, I would just want to, spend some time talking about the new administration's proposed tax changes that could be on the horizon. And if anyone knows how our government works, these things may not happen, but it pays to be prepared. And so, when you think about what potentially is coming down the pipe as it relates, or as it affects the viewers and the average American, there's three different tax changes that they're looking to change. The first is the estate tax, and this one probably affects not too many people, simply because right now the estate tax, there's an $11.7 million exemption, meaning that if you don't make, or if you don't have over $11.7 million in assets, then the estate tax doesn't affect you. However, if you do, then you're going to pay about 40% on your assets. Now, they're thinking about lowering that threshold down, because it doubled. It went from a $5 million exception all the way up to an $11 million exception a couple of years ago, and now they're thinking about lowering that down even less. Now, if you think about it, in 1997, that threshold was just $600,000. So any estate or any assets you had when you passed away that was over $600,000, that basically was subject to a 55% tax. So they're talking about changing some of those things in regards to the estate tax. The second thing they're talking about doing is capital gains. So capital gains is basically the tax that you pay whenever an investment that you have, it appreciates in value, a stock, a house, a collectible, whatever that may be. Right now, that maximum capital gains rate is 20%, but they're talking about raising that even higher. So that really will affect a lot of the viewers and the average American out there. But the main one, John, is the individual income tax rate, which right now they're just talking about raising that top rate up from 37% to 39.6%. I think that's a slippery slope, simply because I think that tax rates across the board will probably go higher, and that's because of the debt, $28 trillion in debt, all the deficits, things of that nature. And so that is what will affect most viewers, most retirees, because that's the thing, that once you start taking income from any kind of company retirement plan, that is going to affect you big time.
Marcus, I'm curious, when you talk about changes in taxes and you wonder why people are so rabid about politics, a lot of that is involved, isn't it? Because I'm curious sometimes, I'm going, why does this person care so much if so-and-so is elected? And I'm not trying to pick on either party, but there is a reason. Taxes do change when political parties, when leadership changes, correct? Right.
And, when you think about it, when you look at the current state of our economy and the bills that we have to pay, I think moving forward, regardless of what administration is there, they're just going to do some simple math, look at what's coming in versus what's going out, and they're going to have to make some tough decisions. And I think one of those decisions is going to be to raise taxes, and that's regardless of what administration is in there, period.
That makes sense. You use the term stealth tax. I was reading.
Yes,
okay,
yes.
What is stealth tax? It sounds like something you don't see coming. So it's a good name, because we've all seen a stealth bomber. If you don't see it coming, it's really dangerous.
Yeah. So a stealth tax is basically a government's way of raising taxes without raising taxes. So I'll give you an example that's close to home. So here in the Commonwealth of Kentucky, any retirement income upwards of all the way to $41,000 was free from tax until a couple of years ago, when they lowered that threshold from $41,000 to $31,000. And so that's a way that they basically increased tax revenue without just blatantly raising taxes. And it actually equated to about a 25% increase for people who were getting that retirement income, because that threshold went down.
And it doesn't hit the headlines.
No, it doesn't hit the headlines at all. Another way, even on the federal level, in regards to retirement. When you have money in a company retirement plan, 401k IRA, once you get to age 72, you have to pull some money out. It's called your required minimum distribution, right? You have to pull money out at age 72, and it starts out at about 4%. So really, what's to say that 4% number that you have to pull out, they could easily say, you know what, you got to take 6, 7, 8% now, because it goes up every year after that. And so that's a way that they could raise taxes without raising taxes. Social Security, a long time ago, they said your Social Security will never be taxable. And then in the 80s, depending on what kind of income you have coming in, 50% of it could be taxable. Then in the 90s, they raised that threshold up to 85% of your Social Security could become taxable if you hit certain thresholds. And who's to say that they don't change that and say, you know what, 100% of your Social Security can now be taxable if you meet certain thresholds. So those are stealth taxes without actually raising taxes.
I can see it coming too. I tell you what, I'm worried about, you know, Social Security and other tax raises that you just referred to. I want to talk a little bit about the importance of the fact that, you know, there's a lot of wealth management companies out there,
right,
but really knowing taxes, if you're getting ready for retirement, that's a big part of it. I think some people say, well, I've got stocks, or I have this, or I've got a couple of, you know, side gigs, I'm good.
Yeah.
But if you don't put taxes into the equation, you're setting yourself up for not the retirement that you probably thought you'd have.
Right, because in our practice, there are, we basically categorize income and assets into 3 different buckets. So you have your taxable bucket, you have your tax-deferred bucket, and you have your tax-free bucket. Most people have the majority of their savings in the retirement in that tax-deferred bucket, meaning that it has not been taxed yet. When is it taxed? It's taxed when you pull it out. And once you pull it out, what taxes are you paying? Whatever tax rates are at the time that you pull it out. And so we work under the assumption that tax rates are going to be a lot higher in the future than they are now. And so when you start pulling that money out, how much is actually going to go to you and how much is going to go to Uncle Sam? So if you don't have a tax reduction strategy in your retirement plan, then you don't have a comprehensive retirement plan.
Yeah, we've talked about this before, Marcus. I think it's interesting. You have a partner in retirement. You may not know it, but Uncle Sam is there with you all the way, and he's happy to go with you.
Every step of the way, he's just licking his chops, ready to dig into your pockets.
For those who would like more information, because everyone's personal situation, financial situation, tax situation, it's all different. What do you recommend as far as sitting down with you? Can they get a one-on-one meeting? Do you mention a workshop? You mentioned workshops. You've done those before as well.
Yes.
You seem to work real well, not only in front of a crowd, but I like the one-on-one with you. For those who want more of that, how can they get it?
Yeah, I think the most effective way is to sit down one-on-one where I'm able to find out a little bit more about your specific situation, because everyone's situation is different. There's a lot of tax reduction strategies that work for some, that it doesn't work for anyone else. So it's a good time for me to sit down with you, find out where you are, and see if we can add value and help you out down the line.
Well, I like it. And he has all the technology available to him, and plus a wealth of knowledge, as you can tell. What I love about you, I can throw any curveball, go off script, and you goes boom, boom, click, click, click. You've been doing this for quite some time. Where did you develop your passion for this, Marcus?
It's one of those things where you start off as a stockbroker, and then you evolve into a financial planner. And being a fiduciary, you have to put the client's interest above your own. And being in this business for so long, you realize that people don't think about taxes. They worry about Social Security, they worry about health care, things of that nature. But one of the biggest expenses that one has in retirement are taxes. And if you can't plan for that, then you're not going to be doing as well, throughout retirement. And so my job is to give people that insight, guide them along through retirement, because people just want peace of mind. People want to be able to sleep at night. They don't want to worry about all the investments in the stock market and taxes. They just want to enjoy life. They work 30, 35 years. They want to spend time with their kids. They want to travel, and they don't want to worry about things.
We've talked about this before, but I think it's worthy of mention once again. For those out there who have the mindset of saying, hey, I'm set, I don't need a financial or a tax expert, what would you say to them? They do. The more I talk to you, the more I realize I do, right, because a lot of this is going, right over my head.
It's like this. Most people, there is that segment that they're just the do-it-yourselfers. But I think that you may be able to do it yourself while you're working and while you're in that accumulation phase. But once you transition from working to retirement, that's when so many things change, and you need someone to guide you along, because there's, as you're going down that retirement mountain is what we call it, there's so many pitfalls that can happen along the way.
Healthcare.
Health. We're talking about taxes, a stock market decline, interest rates are at historic lows. There's so many things that can happen, and you need that guide down, along the way. I mean, it's like this, Peyton Manning, Kobe Bryant, late great Kobe Bryant, they still had coaches. Tiger Woods, they still had coaches.
That's true.
Even though they were at the peak of their games, because they know if they can just make certain small adjustments, that it can go a long way.
I like that analogy. I love sports analogies. Once again, Marcus Warren of Warren Wealth Management will put his information up on the screen. Give him a call today. As you can tell, a wealth of knowledge. He knows your situation is different. He'll do what's best for you as a fiduciary. Did I pronounce that well?
You sure did. Congratulations. Fantastic.
Lesson number one, pronounce things correctly, John. Retirement tax review. He can help you out. Again, Warren Wealth Management. Coming up here, Lou City FC has a big game on Saturday night. The Indy 11 are coming in town, but it's more than just a game. We'll give you all the details, a reason to be excited on Wave 3 Listens Live.